You made the right call last week when you said the Fed was going to hike 75 basis points. You're still sticking to another 2 consecutive 75 basis points hike. Is a pause likely after that?
Yeah, I think there's another 75 basis points coming in July. And then we'll see how the data unfolds. I mean, clearly things are slowing down on the economic side, but inflation has yet to really show definitive signs of peaking. So there could very well be another 75 basis point hike in September. I think the Fed wants to get this thing going, namely tighten in a way that isn't as delayed as it was earlier this year.
The market seems to be pricing a very aggressive Fed at this point in time.
Correct.
Where do you see the terminal rate? And at what point do you see inflation peaking?
Yeah, well, it's a very difficult question to answer because in addition to raising interest rates, the Federal Reserve has started this month to reduce the size of its assets, of its balance sheet. It's doing quantitative tightening by letting its assets roll off. And nobody's really come up with what does that imply in terms of the equivalence of a Fed funds rate hike. My guess is that what the Fed is doing, which is letting the balance sheet drop by $95 billion per month, starting in the next couple of months, is that's equivalent to something like 50 to 100 basis point increase in the Fed funds rate. So that implies that the Fed funds rate doesn't have to go to 3.5% or 4 or 4.5%. 3% may do the trick. 3.25% may do the trick when you add the tightening from quantitative tightening.
And I wanted to ask you about that. So if you're looking at it from that perspective in terms of not being able to necessarily quantify the impact of the balance sheet, do you think that the markets right now have priced in everything accurately? Because you've got the balance sheet, you've got the potential that the markets aren't necessarily pricing earnings revisions to come in the second half, but it could also be that this downturn we've seen is the markets front-running all of that. So what's your take on all of that?
Well, you know, we live in fast times here. We've had a remarkable business cycle. We had a terrible recession in 2020 that lasted all of 2 months. And then we had a remarkable recovery that basically brought us back to where we had started before the pandemic within about a year. And then we had a inflationary boom, and now we have stagflation. And so everything is happening very, very quickly here. And this bear market's occurring very quickly. And I think the market has discounted a tremendous amount of negative news here, both in terms of Fed tightening and a possibility of an economic slowdown and even a recession. I won't say that it's discounted all the possible bad news out there, but it certainly has discounted a lot. And I think we're kind of at an exhaustion stage in the selling. I don't know if it's capitulation. I think people are just kind of exhausted, and I don't think that it makes a lot of sense to panic at this point. It's a little too late to panic. And I think long-term investors are going to find that there's some great opportunities here.